All right, so markets closed. It is Monday, the 4th of October. Very exciting stuff. Over the weekend, I saw a lot of reports of banks possibly failing. A lot of people caught onto that. Credit Suisse, for example. So, given Friday's ugly close, which was the close at low of day for the daily, the weekly, the monthly, and the quarterly, I forgot to mention that. We got quite a nice surprise, typical of the markets, total reversal. And I think it's because of, I think it's ultimately because of the Bank of England's reversal, which happened a few days ago. But I think they rang the bell, and now we're getting a lot more people sort of stating, look, it's time to pause or to slow the pace of rate hikes or to absolutely reverse and follow in the Bank of England's footsteps. Whatever the case, I don't like to look into news too much. I do like to look at the technicals and ignore the news because the technicals reflect the news that has been priced in, news that has not yet been priced in sometimes. You have a lot of insiders who know things and position themselves. So, you can spend a lot of time interpreting or guessing news. And in the end, sometimes they, buy the rumors, sell the news, sell the facts. So I never read into it too much. But the point is, over the weekend, there was a lot of talk over bank failures, whether it's Credit Suisse, Deutsche Bank. And given Friday's ugly close, it was quite a surprise to see this fake out. And the SPY was one of those markets that really closed ugly, but look at that, right back into the chop. So now we're sort of grinding here for a double bottom. Given today's close, wouldn't be surprised if there's a bit of a follow through tomorrow and test that resistance point again that we already tested a few days ago. Resistance 1, resistance 2. Let's see if we can get there. If we do, I'm sure a lot of people will start turning bullish. And if we break out of this downtrend line, yeah, you would have a reason to be bullish. And then the next one would be, well, in my opinion, the next trend line will probably be around here time wise by then, and that would coincide with that. So I'm going to leave this one here, but let's see if we can at least take this out this week. You never know. I mean, there are a lot of problems. I don't care that we'll get into it later, but yields came down, but yields are still high, and there's a lot of pressure in the market. There's a reason people think Credit Suisse and Deutsche Bank and other banks are going to go bankrupt. So let's not start getting too excited about the market turning bullish. So yeah, quite a nice surprise for a lot of people because, to be honest, all the markets were pretty much green today, especially precious metals. I'll get onto that later, especially silver. So yeah, SPY nice reversal, 2.5% up. Nasdaq 2.5% back into the grind for the double bottom. The Dow Jones, that was very weak, that was pretty strong. I mean, it's still 2.5%, but you could say it's pretty much reclaiming its prior support, which turned resistance, almost there, still resistance. But the Russell, which never took out the double bottom, which I mentioned in the last video, that's looking good. But to be honest, it kind of looks the same as the SPY now anyway. So yeah, markets are grinding for this double bottom. A lot of people are hanging their hat on the Bank of England. They may have rang the bell. People say that no bell is ever rung to mark a top or a bottom. Maybe the Bank of England did ring that bell. Maybe other central banks will follow. I mentioned this. A lot of pressure on the Fed. I saw some interesting and ridiculous articles. One of them was what my friend sent to me. What was it? It was a Wall Street Journal where the UN is getting involved, saying, "Oh, the Fed should think about not tightening as much as fast." And there was another one. I think it was the IMF managing director. They're all getting involved. I don't think there's a bigger fight than to fight off inflation, but as usual, the central banks want to save the markets and their friends. So let's see what happens. But anyway, today was a very strong up day in the markets, 2.5% across the board. VIX was down, not as much as I thought, to be honest. 2.5 is a strong day. You expect a bit more. So it's still hanging around 30. If there's a bit more of a follow through in the markets tomorrow, then you can probably see it back down to 28. So yeah, market strong. Let's move to yields. Now, the day has reset, so obviously yields moved more than this, but yields were down. So now we're looking, and to be honest, yields have been down for a while, especially since the Bank of England. That's the first 1 year, the 2 year, it was a nice down day. We're looking at this candle here, of course. So it went to new lows, let's say, but did close a little off its lows. The 5 year, same thing, nice and strong on the way down. The 10 year, the almighty 10 year, the most important one, going to test prior breakout. So that'll probably be support. We could probably venture into 3.4s. The 30 year also. So they're all sort of drifting lower and lower than they've been in a while. I mean, lower than the last couple of candles, let's say. And same goes for the other markets. Jesus, what's going on there? Ignore that. Right back to breakout. So that's what I'm expecting to see on the 10 year, the US 10 year. It's almost done it anyway. Italian, they've all done it. Basically, they've all got the same sort of trajectory, except the British, that's just more exaggerated, especially the 30 year, because that's what the Bank of England is aiming to target. Basically, they've done QE. They say it's temporary until October the 14th or something. Let's see. There's nothing more permanent than a temporary government program. They'll always find an excuse. There are so many to pick from in the world right now. So yields lower, market up. And that is obviously linked, just as the inverse was. Just as yields were going up, the market's going down. Now, I think it's the Bank of England. I think it's, other banks, other institutions calling for the Fed to do the same. And I think that's what, if the market does go up from here, if there's any follow through tomorrow, I think it's all because of the same thing. So let's look at currencies. The DXY is weaker following yields being weaker. Looks like the DXY could go to 111, maybe venture into the 110s to test that breakout, which we mentioned before. So here's a long-term breakout. We could at least expect it to test this. I mean, it's still going to be very bullish. It's still within the very, very bullish and acute move up. So, I mean, you go back down to 109 even, you're still within a very high inclined ascending trend line. Plus, you still would have tested this weekly, monthly breakout. So very bullish, even all the way down to 109. So yeah, I think you can expect that. I mean, the euro hasn't even taken out 1.1, 1-to-1 parity yet, and you'd expect that if the dollar goes down at least to 1. So yeah, I think you can expect more downside in the dollar if the same momentum carries on. Tomorrow, the pound had a bit more of a move. There's quite a lot of a move in the pound, especially if you consider what the Bank of England has actually said, which is we're going to print to save the market. So I think this is something to be sold into soon. But anyway, dollar down, yields down, markets up. I'm rushing this bit because I'm quite excited about gold. Very, very interesting. And I've said it before, but sometimes I feel like the gold market will indicate the overall market move just a few days, even weeks early. And I saw some talk about maybe the gold, especially silver, and also the GDX, GDXJ having done that because they are actually in a bull market since the lows. I heard that, and now I'm going to test that out. But look at GDXJ. I'll go back to gold because I usually finish with GDXJ, but 20% is a bull market. So I know we've crashed a lot, but technically in a bull market now, you can't say that for the other sectors, at least not that many. So, and also broken out the downtrend line. I'm getting ahead of myself. So let's go back down to gold. Now, gold initially wasn't up much at all. It was having trouble actually staying above sort of 1670 during the day, and it just broke out. I mean, it was silver that did actually all of the hard work and sort of dragged gold up. But I mean, look at this close. I'll get to silver in a second because it was really silver that did everything. And by the way, you can't see it anymore. It was up basically 9% today. And, a 2% move is big. 9 is just colossal. So gold took out its downtrend line. It also took out its prior support, because this 1670, 1680 was very important, multi-year support. Everyone was watching it. We took it out, and then it started to flush. And then obviously the Bank of England did its thing. We reversed, even before I think we were reversing a little bit, at least a reversal. It's even if there was no Bank of England, it's kind of normal that you reverse, test it. Yes, it really is now resistance, no longer support, and then goes back down. But at the same time, we've had yields topping, we had the dollar going down, and then we had the Bank of England announce its QE. And I think today was the day that gold said, okay, we think that QE is going to return. We don't think that we don't believe in the central banks as we did 2, 3 weeks ago. And I must say, I agree. I thought that rate rises would continue until 2023. I didn't expect any QE for a while. The way they've been talking tough for so long. And now I must admit, they're always liars. They always do the wrong thing. But this surprised me, after all that talk, I understand why gold's done this. And a lot of people think it's never going to go lower again. Let's see. But this is a pretty serious statement here. And to me, it's taken out with a vengeance, this downtrend line. Next resistance for gold will be basically, I would say 1720-ish. These lines may have to be redrawn, but I'll trust this sort of area. And I will say that it's a bit of a big one, but yeah, there obviously there's quite a few resistance points around here meeting. Let's just say this whole area here. Yeah, so I'd say 1720 to 1730, yeah, whatever, $10. That whole area is a place to sell. And let's see what happens after that. But it's been moving quite a lot. So next is 1760, and then we'll see. Then you're really out of the long term downtrend line, and up we go. So amazing moving gold. It wasn't gold really though initially that was strong. It was silver. This is absurd. This is just pinpoint. And I remember Nick Santiago saying $18 is a buy zone. And I remember saying if it comes back down to 18, I'll buy it. And I did, but I bought the miners, not silver. And I'm so happy because what a buy at 18. And the miners are just, already last week I went through them. Some of them did 30% in like 3 trading days. And today they just really performed. So look at this breakout of the downtrend line. Closed pretty much a high of day right here above 20, which is a psychological number, and basically just at the next support. You could see these circles are already in actually. So this was the buy, this is first sell. And I remember I said, oh, I wish it would gotten here on Friday last week. Well, today it got there. It actually hovered around here and then just kept going. And now it's straight at the second resistance. And the next one, there's quite a lot of chop around here. But to be honest, let's see. But if there's any follow through with gold, I think it could do it. But I would sell quite a lot here. Obviously, I sold today. I always sell at every level. Never get too greedy. Never get overtaken by emotion. Oh my God, it's going all the way up here. Yeah, I think it is going all the way up there, but very unlikely that it doesn't sort of go sideways down at least a little bit and then, gather more momentum to keep going. If it does keep going, I've got a lot more to sell, but very, very happy, very bullish close. But a 9% move in silver is almost unheard of. So today was a very special day. And the miners, I'll start with the GDX, the seniors, same sort of thing, broke out of the downtrend line. Let's get rid of this. Hasn't made as much of a move as silver has. I think the equivalent would be around here. Let's say 25, 26-ish. So, and closed a high of day, perfect. It could go a little higher. That's the seniors. But you can see, and I remember buying on this little knife catching day. I remember calling it the knife catching day. And it was looking very bearish. Look at it now. But yeah, these are the seniors. Very strong close out of this downtrend line, high of day. I expect follow through, even though it's done quite a lot already. GDXJ, exactly the same thing. And it's done its 20% move almost, or just about. And how much more until the way I see it, it's completely done its move. It's like another 12, 13%. GDX, how much of a percent move? 10%. It's typical. GDXJ always does more. Amazing. Absolutely amazing. almost or pretty much just at a into a bull market during a huge bearish flush. I mean, think about it. All the general markets are completely destroyed up just one day, up one day from the absolute low of being crushed. And here we are in a bull market in these. So, and as long as you swing trade this stuff, you're buying here, you're selling there, you're buying there. I mean, my account basically, especially today, is stronger now. And this is what compounding interest does. I mean, when you're swinging like this, my account now today with the markets down here is more than when the markets were like up here. That's pretty much what it all does. And it's beautiful because if the SPY keeps going up, of course the GDX, GDXJ is going to go up. That's just risk on. That's QE. The only reason the markets would go all the way up now is QE, and you can be assured that gold, silver, and the mines will go up even more. So, and if they go down, well, we're going to keep selling into these resistance points, buying back because they're, the GDX, GDXJ are totally destroyed, total value play, and they were sold off before the market was sold off, I think. So let's look at some individual stocks very quickly. This is Barrick Gold, also broke out of its downtrend line, closed above. Newmont, which has been a bit weak, 4% quite good, but to be honest, on last week it wasn't doing that much. You can see this here; it's like it was up 1, 2, 3%, whilst others were up 15%. So it was a bit annoying because most of my sort of my heaviest holding is in Newmont. So it's a bit annoying to not go up too much with Newmont. Agnico Eagle, very nice line to resistance. Didn't sell it. Probably should have. I had my sell at 44.99. It should have been 43.99. I could sell it after hours here, but whatever. Wheaton closed above the downtrend line, which is beautiful. Didn't sell any of these seniors actually. Pan American I did. I sold this at 1669. Why did I do 69? Yeah, okay, it was up here. But then it just closed higher. It looks a very nice close. It's taken out all of its prior sort of highs here. So it could go to 18. Very nice. So I trimmed that mag. I also trimmed that at 1330 something. I think it was just for this downtrend line. So that's good. Closed almost a half day. Really hit the resistance, but I sold early. I thought that we'd done already a bit too much of a move. TPRFF, I sold this at 72. Yeah, where it is. I wanted more. Look at that. Hardly any move, not even 1%. But it doesn't matter. Just because the others are up 10%, it doesn't mean all of them are going to do 10%. It's already done a crazy move. The miners are already up. Today they were up like, I don't even know how much they were up, 5%, but the whole week prior they were up a lot. You're in resistance just because it's not up, sell. Because what happens if GDXJ goes down 4% tomorrow? Well, this will also go down 4, 5, 6%. So yeah, I need to incorporate that into one of my lessons. Well, let's see if I'm right, but I think I will be. Yamana didn't sell this because this is more of this is going to merge with Goldfields. I'm just waiting for the day it happens. It should be any moment now. I don't have too much in Yamana, so I didn't care, but broke out of this downtrend line. Goldfields, bit of a different chart to the others. I really like this stock because it's going to eat up Yamana, so I didn't sell it. I don't have too much in it, but these two will combine and together they'll be a good value. They'll equal these seniors. And I think you can still get all the way up here. So Fortitude, haven't touched it. First Majestic, trimmed it twice during the day. Once when I thought we were stalling, when silver was hitting its first resistance, and then it just broke out and did a crazy extra 3-4% move. I sold it again. Actually higher than where it is. I think it was 40 something. Fortuna sold it also twice, once at resistance, another pretty much where it is. EXK, same thing. I sold it. I forgot where I sold it. I sold it twice, and every time I sell twice, I sell it with several percentage in between. CDE sold it twice. I remember the last sell was 90 something. I think I was looking for 99, got like 92 or something. Beautiful. This has been my absolute sweetheart. I mean, this one here, I spoke about it last week. I spoke about it before the whole move happened. It was my knife catching buy, basically from the low to high, 50%. Just absolutely amazing. Really, really nice. Really nice. Whilst the market's collapsing, 50% move. These two are special. They're always half closed. This one I don't own. Actually, Discovery is one I wanted to buy, and I just put it here to remind myself. Should have bought it, obviously. Reina didn't sell it. There's not liquid enough, and the others don't really count because they are not gold or silver related. That's the portfolio. I don't always go over it. It's just they're gold and silver stocks, and we had a crazy gold and silver day. So, and you can see the rest of the gold and silver, just everything up huge. I mean, they should come down a bit tomorrow, but because of the breakout, the close at high of day, and the fact that I see yields coming down a bit more, dollar coming down a bit more, and even the market's going up a little bit more, a little bit, nothing too crazy. I still think we could get a little bit higher of a move. This is me being greedy, but I've sold. Today I sold. And what did I sell? I basically sold the money I made. So imagine you make 1 grand in one of these stocks, I'll take out a grand. Make 700 in one of them, take out 700. And you do that to all of these, you got a nice amount of money on the sidelines. If it goes down, it's cool. You just took out quite a lot of money. If it goes higher, that's fine. You still got the same amount of value as you did before today happened. So it's a way of sort of being a bit invincible, as I like to call it. So those are the markets. I'll quickly go through Bitcoin. Bitcoin, nothing crazy. I think this chart's a bit weird. I got the log chart. Yeah, Bitcoin. Actually, I was just showing all my charts with the log, which is a bit wrong. Bitcoin, I thought it might make a move during the weekend, but I said don't trade it until it gets to this point here and breaks out. Either breaks out or breaks down. I think it's a bit too risky guessing. At this point, it would be kind of gambling which way it goes. But if the market's going to keep going up, then you have more of a chance that Bitcoin goes up, seeing as everything went up today. But Bitcoin being up only 2.5%, nothing. That's a bit like the SPY. You expect Bitcoin to be up a lot more than the SPY. And the altcoins are up a little bit more, nothing crazy. Pretty muted. And if the market keeps going up and it doesn't take it out, then when the market goes down, it'll probably flush. I don't know. I said same answer as before. Just trade it once we take out this descending line. I don't know how absolutely accurate it is. It's pretty much accurate here now. It's any day now. There'll be some sort of a move. So yeah, lots of fundamental macro news. It's all hinged around central banks. Are they going to do their QE? It's been the story of the last 2 decades, but now it's getting pretty serious because the markets are going down, and there's a lot of talk of big banks, institutions, even countries just going bankrupt or just, having, credit default swaps are now really high, just something going wrong. And I said it before, something will break. A lot of people are saying it. Why? Because of yields. Everything is linked to interest rates. And when the central bank goes up, everything underneath goes up too. And with the amount of debt we have, something's going to break. So, maybe the market's moving before a massive announcement. Let's see. I'm not going to talk too much about it, but it's very exciting. I think there could be a big announcement soon, whether it's negative news, some institution going bankrupt, or positive news, the central banks announcing QE. I think we're getting very close to that moment. And I think gold has sniffed that out, and that explains the huge move. So good luck out there. Good luck trading. But do try and trade these markets. Don't just stay invested. I think there's a lot of opportunity to compound your profits. Yeah. So let me know what you think if you did any trades. Otherwise, good luck. Thanks.